Good morning, everybody. Thanks very much for joining us. I'm Rajesh Merchandani, the Vice President of Communications and Policy Outreach here at the Centre. It's great to see so many of you with us this morning. A little bit of housekeeping first of all. Hello to those of you watching on the live stream, watching remotely. We welcome you. To those on the live stream, this is particularly pertinent. We'd like you to use your technical abilities to tweet the event and also tweet us questions using the hashtag that's usually on the screen, but it's the hashtag that says CGD Talks. For everyone else in the room, I'm going to invite you to silence your phones, but hold on to them. And we do encourage you to live tweet the event as well using that hashtag CGD Talks. As ever, for a CGD event, there'll be plenty of time for questions at the end, and we'll make sure that we get all of those in. So now at CGD, we have been doing, as many of you know, a lot of work on how digital technology can impact the contract between governments and citizens. Part of that is through Alan Gelb, who just sat down there, and Anit Mukherjee's work on biometric ID and how it can help donors and how digital technology can also help donors and people deliver services and cash to the world's neediest. Some of that work is also from Mike Pisa on blockchain, from Vijay Ramachandran on anti-money laundering legislation, and Liliana Rojas Suarez on financial regulation for financial inclusion. So we're really invested in this whole area. Today, we're going to think about how digitalization can impact the way governments themselves operate within the frontiers of fiscal policy. That's what this book explores. Alan Gelb from CGD actually has a chapter in it as well. And we're delighted to be able to discuss it here today. Policymakers have now access to better information and better systems to collect, process, and act on that information than they ever have before. They can store more data, they can track individuals more accurately, and they can link data registries between agencies. What are the opportunities that this unlocks? What are the challenges to actually making it happen in reality? And what are the concerns for citizens and regulators and policymakers themselves? We have a great panel for you. In a moment, CGD's President Masood Ahmed will come up and introduce them to you, and also he'll lead the discussion. But first, I'm going to invite Sanjeev Gupta, the Deputy Director in the Fiscal Affairs Department at the IMF, to the stage. He's one of the book's editors, and he's going to give us a brief overview of it before the discussion. Sanjeev, please join us. Thank you very much.
Thank you, Rajesh. Can you hear me? Okay. So thank you, Rajesh, for the introduction, and thank you, Masood, for hosting the event at CGD. My task, as Rajesh said, is to lay out the key messages that I'm emanating from the book in 10 to 12 minutes so that there's ample of time for discussion. Before I proceed any further, I'm going to take a minute to also thank the Bill and Melinda Gates Foundation for the support of our project on digitalization and public finances. For us, this is an important project because it has great implications for the technical assistance that we provide to our member countries. And going forward, we see digital technology having a big impact in shaping the design and implementation of fiscal policy. So that's something that's the reason why we are in this business. So what is, Rajesh already took some of my lines, but I'm going to, what are the implications of technology for public finance? One is that we are seeing with the greater computing power and storage capacity, governments can collect a lot more information than before. And indeed, that is happening. They are increasingly collecting information and a whole lot of information on private sector activity. For example, in the UK and Australia, the tax authorities are getting real-time information on payroll data. In Brazil and Russia, they're getting real-time data on retail sales. So already things are moving very fast. Increasingly, they are able to process this information quite rapidly. For example, in UK, again, Paul will have more to say when he comes in here. They are able to construct a profile of an individual based on based on different sources to be able to assess the accuracy of the tax returns filed by the taxpayer. So a lot of information is being put together. And finally, with the with the use of digital platforms, the tax authorities have access to different types of information across the government. So, so what does this mean for the fiscal policy? It means that you can do the same things that you were doing before, but better. You can think of some innovations in fiscal policy design, and but this comes with some new and more intensified fiscal policy challenges. I will enumerate each one of them as I go along. So let me start with the peer-to-peer economy, where a digital platform is used to intermediate transactions between individual buyers and sellers. And so this platform can be used to pass on the information to the tax authorities, as Uber is doing in Estonia. And also one could use this platform to withhold taxes, as Airbnb is doing for hotel taxes in many parts of the world. Similarly, the availability of all this information will improve the cross-border exchange of information to detect tax evasion and avoidance. And then electronic filing of taxes has lowered the cost of filing, lowered the cost of compliance for the taxpayers, and also lowered the cost for administering taxes for the government. And with the pre-population of tax returns on the basis of third-party information, it has further reduced the cost of compliance for taxpayers and allowed to expand the tax base. And the only thing that the taxpayer has to do is to make sure the information put in there by the tax authorities is accurate. Similarly, electronic invoicing is improving the administration of indirect taxes and reducing the fraud. And there was a mention of M-Pesa earlier by Rajesh. The use of M-Pesa in Kenya to make payments for taxes and public services through the mobile phones is another dimension through which one can improve the compliance and expand the tax base, as we have seen in some other countries. Biometric identification and digital payment systems has cut bureaucratic inefficiencies and improved targeting of benefits and of public services. And this has also produced some fiscal savings in a number of countries. For example, in India, the use of Aadhaar system is being the Aadhaar system is being used to promote financial inclusion and to target benefits, and with reported fiscal savings in the country. The estimates that have been made by some people about the use of digital technologies indicate that one can save up to 1% of GDP in developing countries through the use of digital platforms. And we believe that this estimate may be an underestimate simply because it does not take into account the second round beneficial effects of digital systems. Similarly, the availability of real-time fiscal data, such as daily information on VAT revenues, cash balances, can help governments to monitor better economic activity, do better forecasting, and have a better budget preparation. So what are the future innovations in policy design that one can think of? So one can think of a more efficient tax design. One is that instead of basing one's tax liabilities on annual income, one could consider doing it for the lifetime income and wealth. One can also think of having a progressive, individualized VAT based on individual consumption pattern. And if we are able to target benefits, then we don't have to use blunt instruments to redistribute incomes, such as having zero rating of necessities in the VAT context. But with this new developments come some challenges. One is, with all this data that is being collected, they are concerned about privacy, especially in countries where the legal frameworks for protecting privacy are yet to evolve. There is also the issue of leakage of data from the government platforms, the concerns about cybersecurity. We can only benefit from digital inclusion if the population has access to digital world, and that may not be the case. And in some countries, there may be some constraints, institutional constraints, such as political, human, etc., which impede the adoption of new technologies. We know that from the experience of integrated financial management systems in a number of developing countries, which didn't yield the kind of return we were looking for in those countries. There are some other challenges, and the other challenges, I'm going to present two more of those. We know that in recent years, a number of multinationals are selling products in multiple jurisdictions without having a physical presence in those countries. So should there be a profound rethink about the taxation? Should the companies be taxed on the basis of where the consumers are or where the shareholders are, rather than on the basis of physical presence? So that's one challenge that we have to look at. The other is the implications of automation for fiscal policy. Should one be thinking of taxing robots? Because if that is going to lead to loss of jobs, then how do we deal with it? Should there be a universal benefit to be able to deal with the job losses that arise from automation? Digitalization is not going to be able to address some of the fundamental issues that we face in fiscal policy design. There could be political economy constraints to implementing fiscal policy, such as the middle classes may object to giving benefits to the poor because there is not much for them in it. Similarly, corrupt officials may bypass the digital system totally. And then there is this basic problem in fiscal policy: to be able to design an efficient tax and transfer system, we have to be able to distinguish between luck, effort, and ability. And we may not be able to do that. What we need is the initial circumstances and the characteristics of the people, rather than the income, to be able to design a good tax and transfer system. Having said that, where do we go from there? from here? Where do we go? So the technology is changing very rapidly. And in some years' time, the conclusions of the book may look a bit naive because the technology has already changed quite a bit. Countries have two choices. Either they can make incremental changes to adopt new technologies, or they can leapfrog. For example, Estonia has its entire system based on blockchain technology with a backup system sitting in Luxembourg. So you can think of something like, Estonia. What we hope is that the book provides a perspective on how one should go forward for the countries in navigating a path through the digital revolution. Thank you very much.
Thank you very much, Sanjeev. Thank you also for being concise and giving us that overview. And thank you all for taking the time to come to this event. We have a great panel now to take us a little bit deeper into some of the issues that Sanjeev has raised and which actually the book goes into in great detail. And I'm just going to quickly introduce you to the panelists, assuming that you've actually spent time looking at the write-up, so I won't go through a great deal of detail. But on my right is Avi Goldfarb, who's now a professor of marketing at Rotman and been doing a lot of work on the impact of information technology on marketing, on universities, and on the economy. And actually, I'm going to start with Avi in a minute. Next to Avi is Beth Adair. Beth has worked in fiscal policy and tax issues in the industry in different ways, as you'll have seen. She was working both at tax partner at Ernst & Young, and then more recently she was at Airbnb. And so Beth brings a perspective, I think, which is going to give us very nice industry and digital economy perspective as well. Next to Beth is Paul Johnson, who's the director of the Institute of Fiscal Studies in the UK, also visiting professor at University College in London. Paul has written and worked extensively on public finance, public policy issues. And finally, Vitor Gaspar, who is the director of the Fiscal Affairs Department. And of course, it's Vitor's department that has produced this book. But Vitor has also been thinking himself on fiscal policy issues, both in the fund and before he joined the fund. And actually, I want to come back to something that he did before he joined the fund. What I thought we might do is spend a bit of time having a conversation with the panelists, and then I'd like to open it out and make sure that you, if you have questions or comments that you would like to make, you have a chance to interact with the panelists as well. And I wanted to start a little bit first with exploring in more detail the potential. So what Sanjeev has laid out is many things that you can do better and more innovatively as a result of the digitalization of public finances. But actually, there was also one part of the presentation was how public finances copes with the digitalization of the economy, which is a slightly different angle. And I'll come to that as well. But maybe I'll start with Avi. Avi, you kind of seen the presentation. You've had a preview of the book. You've thought about these issues. So we could do a lot. How likely is it, in your view, that we will actually, in practice, be able to realize some of these potentials? How do you see the scope for this going forward?
So that's a good question. I'm very optimistic, but I think it's going to take a lot longer than we think. And so in 1987, there's this famous quote from Robert Solow saying, we see the IT revolution everywhere except in the productivity statistics. In the sense that by 1987, business computers were about 25 years old, and everybody was talking about computers. They were in the press all the time, but there was no evidence that they'd improve productivity really in any way. That productivity boost from computers did arise. It happened about 10 or 15 years after that. And so we see, and then in the public sector, it's maybe just happening now. And so we see lots of exciting opportunities. A lot of these things that we're hypothesizing about are likely to come true, I think. But it might be, we might see, okay, it happens in Estonia here or somewhere else there, but in terms of a global impact, I think it's going to take some time.
Okay. Paul, could I turn to you? Because in a way, in the book, the UK is cited a number of times as a country which has made progress in various dimensions of using digitalization in public finances. And now you're sort of sitting there. How do you see this in real life? Are you seeing the potential benefits coming through? They're turning out to be a little bit more complex than we might imagine?
It's funny how other people see you, isn't it? It's it's certainly it's not particularly how it appears in the UK. I think there's two or three things it's worth saying on that. I think to the extent that we're moving towards digitalisation in public finance is very much in the first of Sanjeev's boxes, which is that it's about doing the same thing better. There's not much thought at all, I don't think, about doing different stuff. Secondly, there's a wonderful book by a couple of our leading political scientists, which was published a couple of years ago. It's called The Blunders of Our Governments. And it's not about blunders like wars, it's about blunders in public policy. And it's a big book, and about a third of it is devoted to IT blunders, which have cost literally tens of billions of dollars of wasted money. So I think the actual capacity of government to introduce these things is certainly questionable. The third thing I'd say sort of more positively, though, is that there are some indications of movements as a result of digitalisation. So one of the changes that has happened, and which you've already heard a little bit about, is that there has been a move to. So we have a pay-as-you-earn income tax system. And now that each month that the payroll is paid, that data goes to the revenue authorities, and they do have that absolutely real-time information on your income and your tax. Now that makes a little bit of difference to the tax system. It allows tax codes and payments to be kept up to date. But what it's really allowing is a big change to the benefit system. So we have, for the last 25 years or so, or 20 years or so, had a significant system of in-work tax credits. Now, when those are still, and certainly in their early days, a lot of some huge implementation problems. The idea was that they should adjust as your income adjusted. That was not possible given the technology as it existed. That created enormous problems because a lot of low-income families were overpaid these tax credits and then had to pay them back. And that was one of the blunders that I referred to earlier. But these are now being replaced by something called universal credit, which is putting all of these things together and is going to rely on real-time information and should allow actual payments to change month by month. But let me conclude on a slightly more gloomy bit of that. The legislation for universal credit was introduced in 2011. The idea was that it'd be fully in place by now. The current plans is it might be in place by 2022. Again, there's a lovely description of this, which describes being in charge of the rollout of this as being a bit like being one of Henry VIII's wives, in the sense that there have been 7 people in charge of this, 3 of whom have been sacked, 3 of whom have resigned, and 1 of whom has died in post.
Right. Well, actually, Paul, I think this reminds me of the way, in fact, people used to describe this, the big IT projects that were described to the UK government, these massive rollouts, that they were rather like North Sea oil projects, that the cost and time to completion was independent of the stage of project preparation. So it's always the same.
It's always 5 years out.
Now, I want to come to Beth a bit, because Beth, one of the dimensions of what Sanjeev is talking about is really how the digital economy is posing challenges for public finance. So how do you actually identify and where do you tax and how do you actually monitor, measure? And you've kind of looked at it from the industry side. How do you see this issue, and in particular, do you think that the digitalization of public finances will help us to cope better with the digitalization of the economy in terms of taxing that and dealing with it? Or do you think that actually the issues about taxing and addressing the digitalized economy are different from the digitalization of public finances?
I think that all of these issues come together. I think there's a lot of opportunity here. I agree with some of the other comments about the time and effort it will take to realize those opportunities. One of the things that businesses see, and I think governments see as well, is that more information can be overwhelming, and it needs to be useful. So I think companies often feel a burden of governments requesting large amounts of information that maybe they don't exactly know what they're going to do with or have the ability to process. Similarly, businesses have a massive amount of information. Digital businesses become global very quickly and find themselves dealing with the need to try to comply with many, many, many countries' tax laws and the cultures in those countries in ways that are very challenging. So I think that one of the things that's important for everyone to remember is that we're dealing with a lot of common issues. We come at them from different perspectives. The business world, the consumer, and the government all have their own perspectives on these issues, but the underlying issues are similar, and we have some common ground where we can look for solutions. And I think that's where the digitalization of public finance and dealing with the digital economy start to come together.
Thank you. So, Vitor, I'm going to come to you next, which is, and really ask you the following. I mean, the IMF has played a big role, continues to play a big role in getting good practice disseminated and adopted around the world, across the membership. And here, I think you're faced with the question of how much energy effort should the IMF be putting into the more generalized adoption of digitalization in public finances? Is this something that you see as an important issue for sort of a small subset of the membership, or is it something that 189 countries around the world need to start thinking about and that the IMF is going to be actively engaged in promoting? So what's your perspective on this?
I'm naturally a very optimistic person, and you reminded me of a quote that Immanuel Kant repeated in his works. And he said, the fate leads the willing, but drags the unwilling. You can use digital to substitute for fate. The economy, our economy and our society are going to become digital. And either governments have a smart approach and they facilitate change and they try to shape change, or they will be dragged by dynamics that they don't control. Now, we see lots of potential, we see lots of synergies, and we're reminded that when the last all-purpose technology was adopted, that was electricity, initially the productivity gains were very small. Electricity replaced other forms of energy at the margin. And factories, for example, were organized exactly along the same lines, right? So the idea of entrepreneurs back then was that they were doing what was done before, but better. They were not changing fundamentally what was going on. They were not promoting revolutions. Given that there are lots of opportunities for discontinuities, we have digital revolutions in the title of the book. So this is not first and foremost about doing what we're doing better, is about doing things differently. Sanjeev very much stressed that when he talks about financial inclusion and the synergies between financial inclusion and, for example, tax administration, right? These synergies allow for deep transformation. And now think about how things are changing in the world today. Estonia used the opportunity of a fundamental change around the early 2000s to go digital in terms of public administration. And the digitalization process in Estonia was public and private in parallel in a very synergetic way. That leads to a situation where some of the best countries in terms of public administration practices in the world, Sweden, Denmark, Finland, are looking at Estonia to adopt solutions in their own countries. Clearly, Estonia has leapfrogged. Estonia has not reproduced best practice. Estonia has defined best practice. You may think, well, do you have to be in Europe and close to Scandinavia in order to do it? No, just think about another example that Sanjeev gave. Think about India and the Aadhaar system and the potential of use of the Aadhaar system, for example, to target subsidies. And at this point in time, we already have solid evidence that that's making a tremendous amount of difference in India. And I could continue, but I believe you don't want me to.
Oh, I always want you to. It's the time that is against us. But actually, I do want to come back to you in a minute. And I want to ask you, maybe I'll do it now in reverse order, which is, so you can see Estonia. I can think of, half a dozen other countries that could quickly make that kind of leap. They have strong institutions by and large, and this is redefining how they do public finances. So let's now think about 30, 50 countries spread in Africa, in Asia, parts of Latin America, where institutions are weaker, where the public finance administration has been weak, where tax to GDP ratios have been relatively low, and attempts to improve them through traditional means have been mixed, shall we say, to be diplomatic. Now, would you say that the possibility of using digitalization of public finances in those kinds of situations is something we should think of as worth exploring? This could be a real opportunity? Or do you think that there are different issues in that set of countries where this is really not going to be part of the shortcut to better outcomes?
No, I believe that the possibilities are tremendous. Just think about a country where you're concerned about the possibility of corruption in public procurement. The use of electronic means to document the procurement process will allow completely unprecedented levels of transparency. The use of blockchain makes the documentation of all stages of the process something that can be shared and can be audited in completely unprecedented ways. But the area where we have been more active working is the area of tax policy and revenue administration. Sanjeev has been associated with an hackathon in Senegal to look at how technology could help Senegal overcoming a number of challenges in their tax administration that had been proved to be very difficult over the years. And more recently, it has engaged in an ideas workshop in Uganda with a more ambitious agenda that covered tax policy and revenue administration. More generally, we see that digitalization is something that we can put together with a medium-term revenue strategy that allows a commitment on the part of the countries and an engagement on our side, covering a period of 4 to 6 years, because institutional change, as you were emphasizing, is not something that can happen overnight.
Thank you. So maybe let's look a little bit at some of the risks with this. So Afi, you see the potential, take a bit longer. In a way, one could say it's benign. It'll just take a bit longer to get there. But are there things that could go wrong that you would worry about and say, well, let's be careful because this could actually produce some outcomes that are not just slower, but worse?
Yes, of course. So the first thing that could go wrong, it relates to what we were just talking about, which is, well, if you invest a lot of energy and time in something now, and the payoff is 20, 25 years from now, that's a lot of waste. And we think about in the private sector, where have we seen the boost from computers and from computing, and how has that actually, transformed industries? It's been in places where there is competition, and what happens is not all firms adopt, or some people adopt one technology and others adopt another, and competition allows us to figure out who the winners are, and competition allows those winners to expand. And so we've seen a big impact of IT in the US. We've seen a much smaller impact even in Europe, except for among American-owned firms, where they can import the technologies from the US. So the first risk is we're going to spend a lot of time and energy and resources on something that's not going to really have much of a big benefit. The second risk it relates to privacy. And so this is something that I'm usually on the other side of. So usually my argument on privacy is when governments regulate privacy, it reduces innovation, because usually I'm talking about privacy regulation in Europe, the United States, or Canada. And in those situations, what's happening is the government saying, you know what, corporations shouldn't be allowed to collect certain data, and so they're just putting up barriers to digitization, essentially, or putting up barriers to artificial intelligence. And so companies need workarounds, and that essentially limits innovation. As a society, we might accept that that's a trade-off we're willing to make, but we shouldn't pretend it's not a trade-off. So we should accept, okay, if we're going to have more privacy, it's going to be less innovation. And in the context of healthcare, that is first order important in the sense that more privacy means people die, like straightforward. So that's a political science, political philosophy point that's not my expertise. What I'm, as an economist, good at is pointing out, hey, there's a trade-off here. You need to figure that out. But privacy in government's a little bit different in the sense that this isn't about a corporation having some unfair advantage over other corporations collecting data. This is about an entity that has a monopoly on the use of force and that can really abuse that power for their citizens. And then now we're moving outside of economics. Now we're saying, well, if governments are allowed to collect all this data about people, then we need some checks and balances in thinking about what they're going to do with it. And as you're encouraging such policies across the globe, you need to think first order on, are those checks and balances in place? And if not, then there's another trade-off here between the benefits on fiscal policy for digitization and the costs in terms of the institutions for society.
Thank you very much, Avi. So, there's a waste argument, and actually, when we get to the discussion with the people in the room, I think Alan and Anit were also just finishing a book on digital ID, and it shows many examples where countries have invested a lot of resources in ways that have not been very effective. So we might talk about that. But from the point of view, again, of risks and things that could go wrong, if you look at the current state of discussion around the taxation of companies that work across countries without a physical presence, so whether you're looking at Google, Facebook, etc., there's a lot of question about how one can go about kind of getting a better equilibrium on taxation for them. From where you sit, what do you think are the approaches that might be adopted that could actually lead to bad outcomes for innovation, for development, for all the things that Avi was raising?
Right, so I think that the bad outcomes that I see are all along the lines of governments starting to put too much of a burden on businesses to try to gather information, be their enforcers of whether it's tax laws or other types of laws. So I think, again, finding the right balance between the private sector and the public sector is very important. Privacy is one of the things that causes me the greatest concern. So to add kind of the business perspective on this and coming from a platform perspective, the trust that users have in the business is one of the biggest assets that the business has. Users won't be comfortable transacting through the platform, sharing their personal information, agreeing to stay in someone else's home or have a stranger stay in their home, ride with a stranger, whatever it is, if they don't have some trust in the platform. When the platform becomes the informer to the government, that's a very dangerous ground for the platform and the business to play. And how users feel about that depends on how those users feel about their government. And that is different around the world. So again, when you have platforms that are, or businesses that are trying to operate in a relatively uniform way around the world with users with very different perspectives, the tendency is to protect all users and to protect everyone's privacy. So I think that's something that needs to be remembered. And the other thing is just that there will be too great of an administrative burden expected from businesses, whether it's related to how they comply with their own tax liabilities, VAT, corporate income taxes, whatever it is, or the role they're expected to play in the taxes of their users. I think that businesses are willing to play and that there's even some benefits to businesses to helping facilitate their users' tax liabilities. If a company can make it easier for a user to decide to be an entrepreneur over their platform, then they'll do that because that's a value add to the user. If by participating they get a better liability outcome for the user, all the better. But if the burden goes too far and it's not seen as a value add to the user, or it's too complex and too costly for the company to try to comply, then you start to harm the business, which undermines what the governments were trying to accomplish in the first place. So again, I think those are the places where I see the risks.
We don't have anybody on the panel from the financial industry, but the point you were just making about the use of companies to serve as an extension of law enforcement in some way actually applies particularly in the banking sector, where the role of what banks are now expected to do in terms of gathering information, monitoring their customers has resulted in a compliance cost for them that has resulted in a number of them simply shutting out a whole range of customers because it's commercially no longer viable for them to do the necessary due diligence on them. So we had a discussion here a little while ago about that Vidge was organizing about how remittances have been stopped to many countries by banks because they feel that the liability issues of getting the information associated with those remittances are just too expensive to do in relation to the return they make on them. So I think it does have that kind of trade-off. Avi, then I'll come to Paul.
Okay,
Yeah.
so just on this point, another risk is we have some evidence that companies, especially small businesses, choose not to adopt IT because they anticipate that if they adopt IT, they're going to be taxed more. So it's this perverse incentive that the businesses choose to be less productive because if they're less productive, they can be in the shadow economy. And once they become more productive, then by adopting IT, there's now a record for everything they do. And that generally we think of as a good thing in fiscal policy. But if it's holding back the whole country in terms of people aren't adopting the technology, then it's something also to think about.
It's a trade-off.
Yeah.
Now, I can see this is going to generate a lot of questions with all the points that have been raised. Paul, I'll just come to you before I open it up, which is, in some ways, we're talking about risks of things that might happen. In the case of the UK, you've sort of been watching some of this unfold. Apart from the issue of just delays in implementation that you mentioned earlier of the big projects. Do you actually see the rollout of digitalization of public finances having any perverse effects in terms of public policy?
Well, I think there's certainly a way to go in terms of public acceptability. We're going through a process at the moment which is called making tax digital, the idea being that small businesses, for example, should be having their tax and accounting, essentially their accounts will be directly linked to the tax system, and effectively tax will come out of that automatically. There's a number of issues with that. First, not all companies have got the appropriate account systems, and that's actually very dependent on the private sector coming up with appropriate systems, which they're very fed up with at the moment because this is rather unpopular and it's been delayed, and so a lot of the investment that went in has been wasted. And actually, the idea is that this comes in first for small companies and goes to big companies later, because small companies are where it is seen that there are problems with, particularly evasion. Very much the kind of point that we just heard, that this is seen as becoming digital is seen as a risk because of the money that might end up being taken. So I think there are those sorts of issues. I think there are big issues around privacy. I think they're way overblown in the UK. It's an enormous frustration to me and my colleagues that it's very hard to get hold of data to analyse, and we could certainly have, I think, better public policy if we were better able to analyse data. But then I think the last point I'd make is that a lot of the barriers and a lot of the risks remain actually political rather than technological. So we one of the things that we saw at the beginning, which I thought very exciting reading this book, lots of exciting ideas about where technology might get you in terms of a lifetime base for income tax. Now, that's not why we haven't got to a lifetime base for income tax at the moment. In the UK, and I think in some other countries, we have a sort of dual tax. So we have an income tax and a social insurance tax. The social insurance system is based on weekly, not even annual, but weekly income. Now, there's been nothing for 40 years that has stopped that at least moving annual, at least from a technology point of view. It's entirely about the politics and the difficulty of change. It's not clear to me that the fact that the technology is there necessarily makes that kind of change any easier, and may actually risk moving further away from both from the first best, but also further away from what is publicly acceptable. So I think bringing the public along with you in all of this is unbelievably important, and which is why I agree that this is going to take a long time to have the kind of effect that we're potentially talking about, but we're only going to get there even in a long time if we actually start to plan now. And I think the risk about the way the UK government has done it is they have given no sense that that's where they intend to get, and I actually don't know whether that is part of their thinking. It's certainly not part of their thinking that they have revealed to the population.
I wanted to ask you, although somebody in the room might, how Brexit is going to factor into all this, but that may well come up in the Q&A. Vitor, just before we open it up, can I just ask you, so from where you sit, what do you see as the big risk as we go forward from the IMF's perspective?
That honestly, I don't know. I don't want to single out a specific thread. There are two things that I would like to say.
Please.
One has to do with the importance of politics that was already very much emphasized here. Sanjeev, Carlos, and I have put out a book on fiscal politics, and we believe that the political element in fiscal policy is something that should figure prominently. Let me try to emphasize why I think that this is really at the heart of our debate. Avi did quote implicitly Max Weber. Max Weber spoke about the bureaucratic state as well, and Joseph Schumpeter talked about the tax state. Both the bureaucratic state and the tax state are about processing and using, compiling, processing, and using information. So that's right at the heart of Sanjeev's first slide. So this is fundamentally political inside the state, checks and balances, and in terms of the relation between the state and the citizens. So this is as political as it can be. This will work if the political solution to these challenges is appropriate as well. Politics should not be underestimated in this context. Politics are really at the heart of it. And I had a wonderful second point to make, but I forgot.
We'll come back to it. All right, let's open it up, and please raise your hand if you'd like to ask a question. We'll take 3 or 4 and then come back to the panelists and do another round. So, Jen, the first row over there, Alan, the second row, anybody else?
Yeah, Juan Toro from the Fiscal Affairs Department. A couple of dimensions that I would like to raise to the panelists is a different perspective in the relationship between, let's say, in the area of taxation, tax administration, and taxpayers in 2 dimensions. One is not just the relationship between gathering information, is going beyond that, which is aligning the taxpayer cycle with the business cycles. And I'll give you an example. Electronic invoice system is not about gathering information. It's about setting a platform that will modernize the operation of the trade in the country. There is gathering information, but it's like the subproduct. It's not the main aim. The main aim is to set a platform that will allow business cycle to be more efficient. And in a more general sense, tax compliance is pretty much aligned with the business cycle. So as far as the revenue administration make the platform more efficient, allows more efficiencies in the community. Second example, taxpayers are different. For example, individuals, and the other very important example in this relationship, receiving pre-populated tax returns. It's not, again, about gathering information. It's providing a high-quality services that then, when the taxpayer has this service, complain when they don't receive this service. And I could tell you from my own experience, when I was tax commissioner in Chile, people call saying, why I don't have a pre-populated tax return next year? Or why I'm not entitled to have pre-populated VAT returns? Because they internalize this as a fundamental service, a fundamental efficiency game in the business cycle. So it's not just about gathering information, just to offer a different perspective.
Thank you very much. Alan, I think next, Amanda, please, and then the gentleman sitting next to him.
Thank you very much. I'd be interested to hear the view of the panel on the various proposals that are going around to ban or minimize the use of cash. I mean, a lot of this is about payments. It's about making payments transparent, about being able to track spending. And of course, while we have cash, we can't do that. And this doesn't have to be done in the clumsy way that the Indian government did, of course, of just demonetizing. And countries are starting to put limits on the maximum size of cash transactions that can be considered legal. So I'm curious to know, if we're really talking about digitalization, should we take it all the way and pretty much ban all cash transactions, make all spending transparent? And if not, why not?
Thank you very much, Alan. So we're going to go to a cashless economy, please.
Yes, just a comment really picks up on what you're talking
Could you
about.
just identify yourself for the panel as well, please?
I'm Terry Lutz. I'm representing the International Tax and Investment Center. I'm a member of the board there. One of the points I wanted to emphasize is that a lot of times doing digital government, it's not about the technology. I've probably been in 50 countries, ministries of finance and tax administrations over the last 20 years, and they're all impressed with the flashing red and green light. I'm not a technology person, but flashing lights look good. But the problems really come around the preconditions for success, and those preconditions tend to be policy, political, and cultural or social. Just a quick example, when I was working with the OECD about 12 years ago, we did a study on pre-populated returns. And what we identified was a set of, I don't remember all of them now, of preconditions for success. Everybody's forgot those preconditions. Other countries are trying to do it and say, well, why are we not getting as far as the Danish are getting? Well, because you didn't have the preconditions in place. Going back to the Grace Commission in the 70s in the US, Al Gore's political campaign looked at pre-populated returns in the US. And all you had to do was raise one very simple example. I said, okay, eliminate taxes on interest and dividends or tax them at the source. Then you can do pre-populated returns. That ended the conversation. So the point is, I think for all of these initiatives, in many countries, I'm working in Indonesia now, and they're wanting to do a lot of things that their policies are just not in any way, shape, or form. And so while we're, as NGOs or the IMF, advising these countries to do the digital things, we ought to, in parallel, be educating them about the policy and cultural things that need to go along with it.
Thank you very much. All right, let me come back to the panel, because actually there are some substantive points that have been raised here. So who'd like to go first? Avi, you look like you're ready to go.
Reflect on the first two, which is, so how do we think about a cashless economy? Well, okay, well, let's remember our sort of Econ 101. So money is a medium of exchange and a store of value. Okay, so how are we going to move to a cashless economy? People have to trust that the cashless economy is a medium of exchange and a store of value, as opposed to something else. So what, and this circles back to the first point, which is thinking through, well, people have to, if we're going to do digital government and digital public finance, it's much easier if people see it as a benefit and a service. And so the risk in moving to a cashless economy is that people see it as a penalty and not a service. Oh, I used to be able to do things in cash, I can't anymore. It's just so the government can take some of my money. And then what's going to happen is they just won't use the cash from that government. They'll figure out some other way around it. Whether that's going to be a different digital currency, whether that's a foreign physical currency, whether that's just going back to gold or jewels or whatever else, there's a real risk, as you say, well, we shouldn't have cash, that people will still use physical things for exchange. They just, now you have even less control over what those are. And it sort of circles back to the first point in services.
Thank you. So Bitcoin for Airbnb then? How do you react to Avi's point and any other questions?
Well, I think that a completely online business has no use for cash. Right. So there's already, and I think one of the challenges is hooking into all the local payment systems around the world, whatever they are. Bitcoin hasn't been adopted at this point, but I think that the businesses are constantly trying to offer the electronic payment methods that the local users are comfortable with. So this is, again, coming back to that intersection between digital business and digital public finance. Digital businesses, by default, are not cash. So there is an ability to see every transaction and potentially tap into that transaction and pull tax out as the transaction flows through the platform.
Paul?
Yeah, a couple of thoughts. I think the preconditions for success are, absolutely crucial, and in a sense that was a lot of what I was saying. If you don't have public buy-in, if you don't have a view about where you want to take tax policy, if you don't have an agreement that a lifetime basis for taxing income or taxing inheritances or whatever is the right way to go, then you're not going to get agreement on the sorts of digital possibilities that are there. And you need a kind of whole series of things to be in place for that, it seems to me. And that's including a degree of institutional trust in government, a degree of understanding about how the tax system works, possibly a degree more simplicity in the tax system than we have at the moment, and a whole series of other things. So I think these preconditions are absolutely crucial right across the system. And actually that relates to the first point about pre-populated returns, because you have to have an absolute trust that they're going to be right. I think one of the chapters in here is really rather interesting, as it says that essentially if you pre-populate the returns, people believe it, even if it means they end up paying too much. So you can understand that people would accept it if it meant that they were going to pay too little, but the experiments in here suggest that they just take it. And in that world, you've got you're putting an enormous amount of power in the hands of the people who are or the systems that are pre-populating pre-populating the return. So I think the loss of agency among those paying tax. I mean, actually, we may all want to lose agency, but we may lose it in a way which is rather dangerous.
How can I certify that it's correct if I'm not willing to do the computations it was designed to help me avoid in the first place?
Exactly.
So, Peter, you already made the point about politics as being central in a way to the fiscal debate. And I want to link that point to technology in the following way, which is that in many countries, the fund over the years has provided technical assistance to strengthen tax administration, try and improve tax revenues. And in a few of them, you see the result of that. You do actually see tax revenues begin to improve, get more diversified, institutions become stronger. But I can also think of a few where over 30, 40 years, successive provision of technical assistance, which is essentially providing more technology, better in capacity, has not generated the results that we hoped for, because the fundamental problem was that there wasn't a consensus, a political, social consensus to move forward in dealing with the issues. And so I guess my question to you is, with that perspective also, do you think this is just one more technological innovation in some sense in the public finance arena, which has the same advantages and limitations, or does digitalization of public finance in some ways allow us to circumvent the inadequate prior conditions problem that has plagued us in the past?
No. Digital technology is not a panacea. Right. We're not going to have miracles coming from technology. As I tried to emphasize before, political and social problems have to be addressed politically and socially. But at this point in time, and I think that this book will be a good contribution to that, there is ample awareness among politicians and policymakers that the opportunities are tremendous, and so the benefits to engaging in a process of transformation are very high. In the area of taxation, we, together with the World Bank, the OECD and United Nations, engaged in the context of the G20 to propose a new approach that we called medium-term revenue strategies. And Juan Toro there is one of the fathers of that approach. There are quite a few mothers as well. And the idea of the medium-term revenue strategy is to have an engagement for the medium term in this transformation process. There are many elements to a medium-term revenue strategy. The one that I will want to highlight here is that it should generate something like a social contract. Why am I emphasizing that? Because you need to have whole government buy-in, and that requires enduring commitment because you have to commit to the process that's going to last 4 to 6 years at least. You need to be transparent and engage politically with others in the system so that you have the necessary continuity over time. And you need to find an understanding with agents in society, corporations, individual taxpayers, so that you, at the end of the process, will get quasi-voluntary compliance. It is systemic change that we're talking about. One has to approach the tax system as a whole, and that is not only policy, it's also administration, and the legal framework is crucial there. So clearly, one can change the preconditions as one goes along. It's not like the preconditions have to be regarded as a curse. There are a number of things that have to change at the same time. Can I comment on
Please.
The cashless economy?
Of course.
The cashless economy is something that was conceptualized by Knut Wicksell some 125 years ago. He had in mind what he called a pure credit economy, where you didn't have cash, and all transactions were conducted by an organized banking system. And in that context, conceivably, you would have information on all transactions in the economy, And so the environment for a tax administration would be very rich, right? And one could think, okay, should we approach this institutionally? Should we simply abolish, forbid cash? I think that the best way that I've seen to think about this issue comes from Kenneth Rogoff. And when we organized a conference to discuss the papers in this book, Ken was our keynote speaker, and he addressed this issue. And the point that he was emphasizing is that our economies are becoming less cash intensive, quite spontaneously. You do not need necessarily to abolish cash. Cash is being competed away by more efficient means of payments. So we will go to less cash economies, and since one of the perspectives of smart policies is to facilitate change, we may want to nudge the process along so that process of competing away cash will happen slightly faster. In that context, the information that will be available from third parties will become much richer, but again, you have to solve a number of political and social problems, as I believe we have a consensus on here.
Beth.
I just wanted to hit a little more on the topic of simplicity. I've heard both simplifying and coming up with more complex tax systems over the course of this discussion. And I think that while having more information kind of creates this natural tendency to want to make things more complex and individualized, there are some really great arguments for simplicity. It's perceived as more fair. It's easier to administer. It increases the trust that people have in the government when they believe that the tax is simple and fair. It's easier for people to comply. So I think that if you think about it differently, you could say that the mass amount of information and the ability to see all transactions or almost all transactions means that there's a very broad base that can be taxed, and therefore it can be done simply. So just wanted to make the practical point as well as some of the policy and political points for simplicity.
Thank you. Let me see if there are any other questions. There's a hand that went up behind Nancy, I think. Is it? I can't see it. Yeah. It is Nancy.
Anit Mukherjee from Center for Global Development. First of all, thank you. I mean, this is a very, very timely book. And I'm just a little bit struck with two words that came up. One is digitalization, and the other is digital revolution. So I think I would just like to hear from the panel, what is the difference and what is the content of that difference? Because we heard a lot about how it can be pre-populated tax returns. I remember one of the interesting digital revolution in budget analysis that I used to do in India was when it went from a PDF to an Excel. So that was the whole digital revolution in budget documents. But more importantly, what is the future and how do we use digital revolutions happening in other sectors of the economy, independent of public finance, like Aadhaar, as Mr. Gupta had mentioned, like the mobile revolution, which is transferring money directly to people. So how does that link to digital revolutions in public finance?
Thank you very much. Nancy Lee, right behind.
Hi, Nancy Lee here at the center. This question actually builds on the previous question, because I just wanted to ask about whether there are spillover effects more broadly in the economy, in productivity in particular, to return to this theme of when does productivity gains show up? Because you have the combination of greater efficiency in tax and spending administration, you have the greater efficiency in transfers and better targeting, as you all mentioned. But you also have greater efficiency in the delivery of public services, which can affect productivity, like health and education, because you have real-time data feedback on what works and what doesn't. So my question is there any evidence yet for the countries that are at the vanguard of this revolution of actual spillover effects on economic productivity more broadly?
Thank you, Nancy. Anybody else have a question or a comment they want to raise? Come to you. Yep. Maybe I'll just ask I saw a hand go up in the back, but I couldn't actually see. Please, yes, go ahead.
Hello, my name is Sonia Renasa from the Better Than Cash Alliance at the UN. I just wanted to mention, make a comment regarding, I was like 2 weeks ago in Uruguay where the government has done tax or a fiscal reform to increase the use of electronic payments. So what they have done since 2006, it started in 2006, and they did that at the national level in 2014, and it has proven really good results. Too soon to say that it's been successful. There are a lot of work to be done, especially on the micro merchants who are like identified as the weakest link in this sense. But just to mention that what the government has done, they had like an overall approach in terms of like reducing the tax, the VAT, to both consumers and merchants when they were using electronic payments. So when you go to pay in Uruguay, you receive your checks or your invoice, and it says you save X amount of money for using electronic means. So from a consumer point of view, on a consumer behavior, you feel really well. It's like, oh, I saved like 10 Uruguayan pesos, or I save 100. So you start using these electronic means, being like credit cards, debit cards, or any kind of like mobile payments. Just wanted to make that comment. Thank you.
Thank you very much. And I think, did you want to come back with a second point there?
Yeah, just a quick comment on the simplicity point. I think you're absolutely right, but I think there's two levels of simplicity we have to recognize. And if you're looking at it from a whole of government level, let me just use a very concrete example. The earned income tax credit in the US, superannuation in Australia, some things Slovakia did. To implement the earned income tax credit with a separate agency in HHS, the cost of the program would have been 20% of the benefits paid, and you would have had a stack of papers to fill out to qualify. By implementing it through the tax system, it's a few extra pieces of data elements. In the beginning, one piece of paper, even in a legacy environment. So it made the tax system more complex, but it made government overall. And I think there's many examples, and I don't know which one's right, but it's just realizing that there's a balance between the objectives.
And maybe just to respond to that directly, I think that, again, you're talking about which is the most efficient tool for that program, but could you simplify what you're trying to accomplish with the earned income tax credit in the first place so that it didn't need administration by any government agency or less administration? I think that would be, which, again, well, I guess while I'm speaking.
While you're speaking, you can answer any other question and also any final thoughts that you have, Beth.
Well, the digitalization versus digital revolution, I think this point's been made many, many times today, but what I think of as the difference is not the technology, but how it's used. Do you get the preconditions right? Do you change people's way of thinking and way of operating, and then technologically enable it? So it's a tool that can lead to a revolution, but it's not going to create a revolution on its own.
Thank you very much. Maybe I come at the end to you, Vitor, if I may, which is then just ask Paul, any final thoughts?
Yeah, a couple
to this round of questions.
A couple of thoughts on that. I mean, I very strongly agree about that difference between digitalisation and digital revolution. What we've got quite a lot of in the UK is digitalisation. We're a long way from a digital revolution, and in fact, a lot of what the government is still failing to do is catch up with what is increasingly a digital revolution in the private sector. So we have, for example, seen a very large increase in the number of people over the last decade who are declaring themselves to be self-employed or company owner-managers. It's much harder to collect tax from that group of people than it is from employees. Now, that's partly because we have an absurd tax system, which means that even if they declare all the right amount of money, they pay an awful lot less tax. And so the tax system just needs to catch up with that. But that's one of the problems of politics. That means increasing taxes on a group who are seen to be entrepreneurial, and even if they're mostly not particularly, they just happen to have a particular form of employment. But it also requires us to use the information that the online services, whether it be Uber or Airbnb or what have you, to bring into the revenue systems, which they currently don't. So there's both a policy issue there and there's a digitalization issue there, which we are wholly failing to deal with. Second set of issues which was raised about, is this leading to greater efficiency and more productivity and so on? Well, to some extent, yes. As I think I said earlier, the numbers of people employed by our the Revenue and Customs Service has fallen by several tens of thousands in the last decade, actually. There's been a very significant reduction in the numbers of people employed because technology has been used more effectively. Now, this has created some problems, but essentially this has been a significant increase in efficiency within the tax collection system, and there are opportunities for that within the benefit system, though I think one can overstate that, because one thing we do know about the welfare benefit system is that the most effective thing that we've done in the last 30 years in the UK has been to provide people, has been essentially active labour market policies, so to provide people with not just financial incentives, but actually rather more importantly with the need to go down the job centre a couple of times a week, the need to actually apply for jobs, have people who are supporting them into work and so on. So that human part, I think, is going to be hard to take away. More generally, though, in terms of public delivery of public services, there is immense amounts of data in education, health and so on, which ought to be able to be used to improve public services, but by and large is not being used, partly because of concerns, I think significantly overblown concerns about privacy. So, for example, in the UK, it is not legal to link teacher data to pupil data, so you can't actually tell who are the good teachers and how well pupils respond to different teachers, because you're just not allowed to do it. And that's actually to do with the power of the unions to some extent, with which governments of all colours have connived. If you look at health data, well, you can't look at health data. I mean, we have a sort of a national health service, but less access to data on the effectiveness of different procedures and hospitals than most other countries, because of this, again, I think, overblown concern with privacy, which is directly leading to people dying because we are not actually using the information that is potentially there. So in order to gain what I think are genuine productivity and efficiency enhancements with the data and so on that we have to get these preconditions in place so that people are comfortable with that data being used to make policy better.
Thank you very much. Avi.
Okay, so these are concluding remarks as
Please,
well, right?
yes,
So,
conclude away.
So this will touch on actually all three of these last questions, which is what I find really exciting about this book, and maybe even just the existence of this book, is that it gives us a framework for thinking about what could happen. It gives us a framework for optimism to think about what does a digital revolution mean? How should we think about that in terms of the opportunities for public finance? And that ends up touching on productivity and thinking about preconditions. But what it also does is gives us a framework for thinking through, well, as digital affects, yes, the government, but also the economy as a whole, how should that change fiscal policy? How should that change the way we think about public finance? So something we haven't talked about today is automation. Right. And I think that's going to be in the background. That's first order important. So increasingly, for example, mines are being automated. So you need very few people now to dig out resources from a mine. Does that mean we should change the way we think about extraction fees? If a mine isn't going to be providing jobs, it's just providing the metals or the oil or whatever it is, does that mean, as a government, that's a new opportunity for tax because there's not this secondary benefit in thinking about employment? Similarly, how do we, that's very different from the story of taxing robots, which is really just taxing productivity. And so when we think through how is digitization, how is automation affecting the economy as a whole, we need to rethink where the opportunities for taxation arise.
Thank you very much. Vitor.
So first on semantics, if I may, what I learned from the authors of this book is that digitization is when you have a physical object and you make it digital. That's digitization. Digitalization is the process of transformation of an economy or a society because of digital technology. And that process of digitalization is very much going on, and our economies and our societies are becoming digital as we speak. Whether productivity, GDP, and other crucial variables are being well measured in the face of a radical change brought about by digitalization is an open issue. And the IMF has a statistics conference next week where we're going to be discussing precisely that. And I will not give away what my comment on that issue is going to be. Digital revolutions. Digital revolutions is about the policy response that we would like to see. And we would like, in a sense, governments to seize the opportunity opened by technological change to facilitate and shape change. Synergies between the private and the public sector are apparent everywhere. Juan Toro spoke about the cycle of payment of taxes and the corporate cycle and the benefits associated with that synchronization. But think about the example from Sanjeev, the transformation of payment systems, say in Kenya, and how the transformation of the payment systems was associated with a profound transformation in revenue administration. So in terms of our ambition, Masood, the ambition of the IMF is to increase the awareness of politicians, policymakers, the awareness of the general public about the policy opportunities opened by digitalization, and try to be as proactive as we can possibly be, because the radical improvements in lives of people are going to come up when we will move from doing what we're doing now but better, and actually when we think about fundamental reshaping about how public policies should be tailor-made to the digital age.
Thank you very much, Vitor. I think that's a very good point on which to end, because I don't want to summarize any of this, but for me, what I take away from this conversation, perhaps just 2 points that I want to make. One is that I think it's absolutely right that the availability of digital technology does not substitute for the other constraints that may be impeding progress in public finances. So whether it's politics or whether it's societal acceptance or institutional capability. But I do think that using the technological tools can help nudge those prior conditions. So the prior conditions are not set in concrete. And I think one of the challenges for governments is how do you use the digital technology in public finance to try and shift a bit some of those constraints. And I think that's kind of one of the interesting issues that I take away from it. The second one is that I really do feel that important as the digitalization of public finances is going to be for all the reasons we have discussed, how public finances and public policy more generally copes with the digitalization and the digital revolution that is affecting economies and societies is going to be a much more challenging problem for societies to face as we go forward. Because I think that the nature of our relationship with society, with the state, with our employers, with each other, with ourselves, is being fundamentally impacted by the technological revolution which we are now living through. And I think that in many, many dimensions of public policy, we are struggling and will be struggling to cope. So this book really helps us to also get into that conversation. And I think this, Fiscal Affairs Department in the fund has a very broad remit. I think people used to say that IMF stands for it's mostly fiscal. But some of this, I think, maybe even goes beyond the role of the Fiscal Affairs Department. But nevertheless, I hope that you will coordinate another study or a book which will help us to go further into some of those issues. Let me end by just reminding you that as you want to slip into your wallets or purses, please, the little card which has a USB drive with the book on it. so you can read the book at your leisure and not have to carry it. And ask you to join me in thanking the panelists and also Sanjeev for a wonderful presentation. Thank you very much.